Hey guys, James here with Waterford Business Solutions. And this week we're going to continue our discussion on major accounting topics and kind of pick up where we left off with accounts receivable last week by picking up on accounts payable this week. Very similar in concepts, very similar in terminology to a point, just one is income versus one is expenses. So I do encourage you, if you haven't already watched it, to go back and watch our video from last week on accounts receivable. We'll be covering a lot of the same basic concepts this week, so it'll just help you to grasp a lot of that information here. Before doing that, though, I also invite you to go ahead and like and subscribe to our channel. Go ahead and leave a comment below on this video just to help boost engagement and get this video in front of more people who can use this information and who can end up becoming the masters of their own business and the masters of their own finances by watching these videos just like you. So like I said, accounts payable is very similar to accounts receivable. It's just the counter in the fact that it is dealing with your expenses rather than your income. There's still the whole concept of cash versus accrual accounting, where cash is recognizing the money as it comes in, but since we're talking about expenses, we're going to be recognizing the money as it is spent. Whereas accrual is recognizing when you incurred that expense. So in this specific case, when you go to the supply house and pick up that piece of equipment and you receive that bill for that piece of equipment, we would recognize that in an accrual basis, whereas cash, we wouldn't recognize it until you physically went ahead and paid for that piece of equipment. And that could be 15 days later, 30 days later, 60 days later, depends on your terms with your supply house there. So with that time difference there, it could really change when you are receiving the money, when you're billing out the job to the customer versus when you are paying for the material, which is why we want to be using an accrual basis of accounting so that when you buy the material and you pick it up, theoretically, you're probably going to spend that or install that within probably a week, maybe 2 weeks, generally within the same month is going to be pretty close to when that's occurring. So we'll see you billing out the customer for that material and incurring the expense for that material in the same accounting period here, helping us to better track those KPIs, which is why we really want to be using accrual basis of accounting there. So that's a huge deal there that we definitely want to take a look at. And it's going to be a huge factor in really keeping your books accurate and, as we say all the time, mastering your finances and mastering your business and your understanding of everything going on there. Now, really getting into it, like I said, accounts payable, it's the counter of accounts receivable. It's going to be all the money that you owe to others. So the minute you receive a bill from a vendor, you go to the supply house, pick up that equipment, receive your electrical bill for the month, receive a bill for IT services, receive a bill for anything and everything like that, you want to go ahead and put that bill in so that we recognize that that expense occurred. That helps us to track when everything is occurring versus when you're actually paying these bills. And that's going to be the main reason that we kind of want to use accounts payable here and understand accounts payable. But the other thing we really want to do with accounts payable is by tracking all of the bills that you receive and that you owe, you're also going to end up tracking when you are paying them. This helps us really with two things. First and foremost, cash flow. We can make sure that we're optimizing the time that you have to pay those bills to avoid any late fees. We don't want to pay more than you have to, but we want to optimize the time that you have to pay it based off of the terms on those bills so that you're paying a bill as late as possible and keeping your cash as long as you can so that you have a strong cash flow in your business. That's potentially allows you to go ahead pick up the material, install the material, get paid for the job, and be able to pay for that material with the money from the job and not having to pull money or float any of the material for any point in time. So by putting it into your AP system, your bill pay system, it allows us to go ahead and put in not just the fact that this expense occurred, but also when is this bill due. That way we can track when bills are coming due, and we can wait until a day, 2 days, 3 days before, whatever it may be there, to pay that bill, so that hopefully we can be paid for that job before you've even paid for the material. This really helps to provide positive cash flow and keep a lot of money in the business so that you can work on focusing on expanding the business and buying assets that you need or hiring and training employees so that you don't get into a cash flow crunch. The other thing, and arguably probably a lot more important, is going to be making sure that you're keeping records of everything. I can't tell you how many times I have worked with a client that we work with them and either do their accounts payable for them or work with them to do their accounts payable. And the supply house sends them an email and says, hey, when are you going to pay bill 1, 2, 3, 4, 5? And we can go into their system and say, hey, 1, 2, 3, 4, 5 was paid on this date. And the supply house either hadn't applied the payment or had misapplied the payment. And so if we couldn't have proved that, we would have either paid the supply house again, and now we're paying more for that material, we're doubling up on everything there, or we are ending up incurring late fees or fees for not paying on time there, which is again not something we want to do. We want to pay as little as possible for that material so that we can end up being as profitable as we can when we are doing jobs. So having that record there is a huge win, and I would say it probably happens about once a month with clients that we have. Not always the same client, and keep in mind we've got a good bit of clients, so it's not like businesses are having this happen every single month. But I would say on average, a business that tracks their AP, we find 2 to 4 mistakes that a supply house makes in a given year, depending on how much volume they're doing and everything like that. So being able to keep that straight and being able to argue for yourself is going to be a major, major factor there. So definitely a great idea to do it just for that, not even considering the benefits in understanding your finances and understanding and basically bettering your cash flow there. The other thing that it helps is by having a accounts payable system or a bill pay system in place, you're also looking at each and every one of those bills. You're coding those bills individually. So you're taking the time to look at those bills, and theoretically you're going to have a PO system, an ordering system, where you go through and say, okay, this is the PO number, so that we can say, hey, aligns with this job. It makes job costing a lot easier, makes job costing a lot more accurate there. But it also helps us to weed out and prevent any issues of an employee potentially going to the supply house and buying materials on your dime that aren't being used for you, that they're using for their own personal gain or their own personal purposes. As much as we would love to think that that doesn't happen, it happens. And I've found it multiple times for clients that we end up seeing that, and it causes issues for clients. So it's helping us to make sure that the money we are spending is your actual money and providing revenue for you. It's just one more check, one more balance to help you out there. Now, again, it is more detailed. You're not just going in and you're not just swiping your credit card and paying $30,000 to the supply house to pay for all the equipment that you purchased last month. No. You've got to make sure that you're getting every single bill every time an employee goes into the supply house and it's being emailed to you. You've got to take the time to enter it into your accounting system or your bill pay system and enter in each and every bill. And a lot of it can be done decently quickly because you can load it into a program like Bill.com or even QuickBooks or HubDoc, and they will read a lot of information. And so it can take a lot of the entry time away from you, but you still have to upload that bill from the supply house, double check and make sure that it read it correctly, save it, and then go ahead and later on batch pay all the bills together. So there's definitely extra steps here. There's more time involved. And it's going to take you longer. But having that extra time involved gives you a lot more accuracy to better understand your financial KPIs, to better understand where your money's going, and to really enhance the operations of your business. Now, is this something that I would say you need to do as a one-man show? Probably not. You really don't have enough volume, typically speaking. You're not having multiple employees going and buying or anything like that. So is the time versus benefit there really going to be worth it? No. As a 2-man, 3-man, or 2 or 3 truck show, it could be important, but again, the time versus benefit there, not going to be super. But if you're starting to get into the point that you've got 4, 5, 6, 12, 20, 30 trucks on the road, absolutely you need to have an AP system in place. And many businesses don't operate with this. Many businesses just operate with, oh, well, we'll just go and buy everything when we need it. We won't keep inventory. But then they end up with employees taking material, taking equipment. They end up with supply houses double and triple billing them. And that does happen. So you really want to ensure that you do have an AP system in place if you're doing, honestly, anything more than about $500,000 a year in sales. As always, guys, thanks for joining. I hope you found this video informational, and I hope you're able to take this and really work on bettering your business and expanding your business. If you need help with that, have questions or anything like that, don't hesitate to reach out to us here at Waterford Business Solutions and give us a call at 864-351-0852 or shoot us an email at info@waterfordbusiness.com. Until next week, have a great day.